It's Thursday, February 24th. You're watching the Daily Market Comment by Raf Boyajian here at XM.com. I'm Cristina Marujos. Traders in Europe and around the world woke up to a dark day on Thursday after Russia's latest actions confirmed the West's worst fears about Ukraine. Russian President Vladimir Putin has ordered a special military operation targeting military infrastructure in the east of Ukraine, prompting Kiev to impose martial law. Although Putin has indicated his aim is not to occupy Ukraine, further and more severe sanctions against Russia are likely to follow from the United States and its allies, begging the question of how far would the US and Europe go in punishing Russia. Markets are already anticipating a greater risk of disruption to Russia's energy exports from Western sanctions. Oil prices have shot up more than 6% today, with Brent crude futures breaking above $100 a barrel for the first time since August 2014. Natural gas futures also soared, raising alarm in Europe, which is already struggling with skyrocketing fuel bills, while in precious metals, gold and silver were more than 3% higher in European trading today. It was an entirely different picture in equity markets as stocks around the world plunged. European bourses tracked Asian markets to fall deep into the red at the open. U.S. stock futures remained in negative territory following steep losses on Wall Street on Wednesday. The Nasdaq Composite is dangerously close to entering a bear market as tech stocks continue to bear the brunt of the sell-off. Other than gold, the Japanese yen has been the main winner from the worsening Ukraine crisis, though the US dollar and Swiss franc have seen increased safe haven traction over the last 24 hours too. In contrast, the euro's post-ECB gains have been wiped out as worries mount about the economic impact of a war in Ukraine on Eurozone members. Investors have been slightly paring back their expectations of rate hikes by the major central banks as the events in Ukraine unfold. However, there is a risk that policymakers might need to act even more decisively than before if the geopolitical tensions exacerbate the surge in energy prices. It remains to be seen, though, how far the US dollar would be able to capitalize on Fed rate hike bets getting revived. The dollar index was last up 0.7% as the riskier currencies all slumped. Thank you for watching today's Daily Market Comment here at XM.com.